Welcome to the Wealth Wisdom, where knowledge becomes power and power builds your future.
December has been a crazy month for SOFI investors, after dropping more than 14%. We had a solid green day today, but it's not just SOFI. The whole market was deep in the red yesterday, whereas today everything looks a lot better. We all know SOFI is a great company, and they have released some big news today. So, in this video, I will look at this and give you my opinion on why I am still bullish on SOFI heading towards 2026. Now, I've been following SOFI for a long time, all the way from only $6. It's the single most talked about stock on this channel. So if you love SOFI and want me to continue making these videos, let me know in the comments. I'm not a financial advisor, and this is not financial advice. These videos are for entertainment purposes only. If you enjoy them and want to see more SOFI videos, drop a comment and let me know. And please hit the thumbs up. It really helps the channel. Now let's get straight into it. Today, SOFI announced the launch of SOFI USD, a fully reserved US dollar stablecoin issued by SOFI Bank. SOFI USD will enable SOFI to serve as a stablecoin infrastructure provider for banks, fintechs, and enterprise platforms. These partners will be able to leverage SOFI's bank-grade infrastructure. SOFI is now the first national bank to offer open access to its stablecoin. With SOFI USD on a public permissionless blockchain, partners can move funds around the clock with near-instant settlement at fractional cent pricing. This allows them to manage liquidity with more confidence and deliver faster and more transparent services to their customers. SOFI USD will also be available soon for all SOFI members. This part is very important. SOFI USD is fully reserved one-to-one by cash for immediate redemption capability. As a nationally chartered, insured deposit bank, SOFI can keep reserves in cash at its Federal Reserve account with zero liquidity risk or credit risk, while generating attractive incentives to be shared with partners and holders of SOFI USD. CEO Anthony Noto stated that they are using the infrastructure built over the last decade and applying it to real-world challenges in financial services. Companies today struggle with slow settlement, fragmented providers, and unverified reserve models. SOFI is helping address these gaps by combining regulatory strength as a national bank with transparent, fully reserved on-chain technology to provide a safer and more efficient way for partners to move funds. It also looks like Anthony Noto and the SOFI team are going all in on this. SOFI USD will be a key element of SOFI Pay for international remittances and everyday consumer point-of-sale purchases. It will also provide an alternative form of payments for Galileo's partners that drive billions of payments per year for companies operating in countries with volatile currencies. SOFI plans for their stablecoin to be used as a secured, dollar-denominated asset in consumer debit or secured credit accounts. This is a big move for SOFI because only last month they became the first and only national bank to offer crypto trading to customers, and now they are doubling down on crypto. This is happening at a time when crypto has been tanking. Bitcoin is down over 30% in 2 months, and Ethereum is down over 40% in the same period. SOFI USD is being built first on the Ethereum blockchain, with plans to expand cross-chain over time. Now let's talk about dilution. As you probably know, SOFI did a public offering earlier in the month, adding 50.5 million shares at $27.50. In addition, SOFI granted underwriters a 30-day option to purchase up to an additional 8.1 million shares. This caused the stock to drop significantly. From the day the dilution was announced, the stock dropped around 14%, until today when SOFI jumped about 4%. Now think about this. In SOFI's last earnings report filed in early November, The share count was around 1.2 billion shares. Even if dilution reaches the full 60.6 million shares, this only represents about 5 to 5.2% of total shares. So a 14% drop in share price doesn't really make sense, especially when the offering price was $27.50 and the stock is still trading below that level. There is a really good article on Seeking Alpha titled SOFI Dilution Headlines Missed the Balance Sheet Upgrade Story. The article explains that while the chart looks shaky after failing to hold above $30, fundamentals point to accelerated earnings and a higher 2026 repricing despite the dilution. SOFI's loan platform business drives higher margin, less rate-sensitive income, reducing reliance on traditional lending and enhancing earnings power. The author gives a 12-month price target of $36.87, representing a 43% upside. Even the most critical investor can't deny SOFI's growth over the past 5 years. Looking at their investor presentation, members have grown from 3.46 million in 2021 to 12.6 million as of Q3 2025. Products have grown from 5.1 million to 18.5 million, representing a compound annual growth rate of 50%. Revenue has grown from around $1 billion to an estimated $3.5 billion in 2025. While adjusted EBITDA has gone from $30 million in 2021 to an estimated $1 billion this year. The Rule of 40, often used to evaluate fintech and SaaS companies, shows that SOFI has consistently performed well, above 40% over the past 5 years, across different macro environments. On top of that, SOFI has raised its guidance again for 2025. Everything is pointing in the right direction. According to valuation metrics, SOFI trades at around 70 times forward earnings based on 2025 estimates. However, on 2026 consensus EPS, that multiple drops to around 47, and by 2027 it falls to about 34, which is reasonable considering EPS growth is expected to exceed 40% year over year. Looking even further out, consensus estimates show strong revenue growth through 2034. In my opinion, these estimates are very conservative, especially considering SOFI has consistently beaten guidance and raised future expectations. I agree with the conclusion of the Seeking Alpha analysis and believe SOFI is being underestimated. Remember, I'm not a financial advisor, and this is not financial advice. This is just a friendly update on one of my favorite stocks. If you'd like to see more SOFI updates, let me know in the comments. If you enjoyed this analysis, like and subscribe, and I'll catch you in the next one.